happy Green Friday. What's going on? Let's go. Let's go. Wake up. Get out of bed, pajama trader. The bones are to be had. You make sure we're set up here. Looking good. Okay. So, futures up at least 0.5% on every indice. NASDAQ 66 basis points or so. The average trickling around. Russell 2000 over 1%. It's a green day. I've been listening to a little bit of Green Day today. Getting a little fired up. A little bit of excitement. Not too emotional. But we are going to get paid on quite a few positions. A lot of you are already up on positions that you entered yesterday, or that you've been in, that you've held, that are now you're going to get paid off. Congrats. Obviously made some pretty big trades yesterday, all things considered, that are not for the layman. Taking a look over here in pre-market action, I do see quite a few fan favorite tickers. CBAT, 11%. MP, 7.5. These are some big numbers. And it's only pre-market, and some of these don't even really trade pre-market. So, SunPower, coming back from the dead, right? Plug, coming back from the dead. I mean, I'm not buying down there. I'm not buying down there. But when we talk about preempting a trade, here's a good example of one you don't preempt. Yeah, it's up today, so someone's going, see, that was a perfect buy yesterday. I made the best buy yesterday at close, for sure. Let me tell you though, boys. Today is the first Cosa Nostra trade. The Unrefusables Fund, voted on by the community. We've got open March monthly 35Cs that need to be processed. Let me show you something that we've got for a feature now. Now, I'm not even sure. Let's see. Did that load? I think it's on there. I think I can move it a little bit. There you go, boys. When we need to check if our order is getting filled or not, I will put that on the screen. Oh, you guys can't see it on here. Oh, shit. That's on the recording. Well, you'll have to look at the recording then. Anyway, you just got an overlay for the account. So I'll show you guys. I'll pull it up on the screen when the orders get filled, and then I'll at some point figure out how to do it in Discord so that it shows on the stream. It's because we're on the window, right? We're on a different window. But either way, we're going to put the order in. We're going to buy as many as we can, up to 3,200. So good luck, traders. Good luck. Now, let's go over a few key things. We've been talking about the dollar, volatility. Dollar continues to push down. Again, a lot of these whips here, right? A lot of whips, a lot of volatility being spewed out of this. In terms of movement, again, this movement is a bit risk on for value, right? A bit risk on for value. It's important to realize when there's dire straits or not. We talked about it yesterday that due to the movement, we were not going to be worried about what was happening. And especially when you look at the volatility index, spot VIX, it just wasn't there yesterday, right? We saw it, it just wasn't there. And that made us decide over here, what do? We buy on fear. We buy when the VIX is high, sell when it's low. We bought some Dos La Casa level Apple calls that may or may not. Guess what? I wasn't waking up hoping. Oh man, I really hope my position's gonna be up tomorrow. Oh gee, I wasn't sweating all night. But we've got the Dos La Casa, La Dos Casa, on the marches. Good luck, trader. That one is sweaty. I mean, I'm not gonna. Let's just be honest. Not gonna troll. Now, for the market today, your question now is all-time high today? Question mark. All-time high today, and then how far above all-time high do you go? You have ideas of candles like here, 1% over the top. This didn't even break. You've got ideas that there's a possibility that mega caps come back today, snap back. You've got ideas with Tesla. I went ahead and posted the downside idea because we've been talking about it so much, and I wanted to make sure that we have a good understanding of what it would mean if this is going to continue. So I put that there. But again, will today be the day that it breaks through that top trend line, puts big points on? Again, we're looking for these. These are trades that we will take at any moment if they come, right? A lot of these are in a technical spot where we can take the trade. This is a doozy with EVs, right? And we talk about sectors that we're looking for. EVs are certainly a very bullish one that have just been in consolidation, right? We're going to catch it on a breakout. We're ready. We're ready. Today is going to be, from what we see so far, a pretty green day. What that means is that everyone in the market is projecting that next week we are going to be trading all-time highs, right? If the market's trading all-time highs, that's more inflow, demand, prices are going to continue. So you need to be, again, deciding today, you're not going to be just making a trade and then getting out by close, right? You're making a trade for possibly even to the week after next week, right? That was when those of you that bought on this pullback, and again, not a pullback, but a dip, fear buying over here when maybe others are worried, or you did it yesterday with some of the trades that I took as well. You were taking that trade not because you believe, maybe you do believe, but not because you believe it's going to be up just tomorrow or that you're going to get out tomorrow. You are doing that because you were planning for a trade that should be in the all-time high and actually give you legs and could go anywhere. When you go, well, what's the target then? What's great about a trade like this here is that you don't necessarily need to know exactly where it's going to go and time it perfectly or have a perfect answer. That's why we don't buy calls at a certain level and sell above it, because you don't know the exact number. All this does is by getting that low point. If you got that low point today and you see where the futures are going to be opening us this morning, you see that pre-market action, you've got like a 0.5% of a base that you can work with. That means you don't have a downside, right? You now bought at a low enough point that due to where we're opening, you don't have a downside. And so now that's all that matters, is that now you have unlimited upside and you can manage your trade through there, and it seems to be a pretty damn good trade when you consider the trend, right? And so a lot of the times it's this part that really screws people up, because then you're buying up here, holding through here, you sell down here, people then buy up here, right? That bad habit of thinking you need to be actively trying to trade every single moment. I think we have a few good examples in chat where people try to go long and then they miss the long, so then they try to go short, and then the short doesn't work, so then they try to go long. Or it's like you're long, you take profit, and then you short it immediately after, and you shouldn't be, and so then you screw it up and you try to go long again. You can't be flip-flopping on every single candle. Sometimes there's a breakout and you can trade it, and then sometimes you just can't. You just got to chill, right? Sometimes you can go long, and then you can't do anything for a little while. You don't go short. Oh, well, my trade's not working out. I better go short over here. No, you can trade both ways, but you can't just switch up your bias every single day and act like, oh, I'll just trade every single candle and I'll catch every single one of these. No, you don't get to trade based on colors on your chart. So we are looking at some upside. Again, this is very, very flow-based. I talked about it with the Hang Seng over here. Those of you that watched this, you probably saw this open yesterday, and you're like, oh, shit. We're pulling into the support over here, and we get the sort of the bad situation. This open, I mean, I was watching it, and I was like, oh, shit. Should have just followed the real technical candle here. That this was a bad candle. That open, I'm sure everyone over there also thought the same thing and then went, all right, what are we doing here, guys? What are we doing here? Because there's certainly an understanding that this was a shitty candle, right? You get this uptrend into this candle, and you're gonna have a pullback. This is certainly that, but it's almost the best case scenario for us because it shows the strength in the market. The equity market as a whole, that you can sell from the open there and really come back and put the points on. It's almost a copycat of us yesterday, a complete copycat. And that's perfect. So, I mean, I think you're really going to get some favor in tech today. Obviously, I preempted it with the Apple trade. We don't usually preempt trades here. We wait for breaks. It's sort of like the open trade as well. Some of you will be like, well, can we take this trade yesterday? I talked about it. Of course, you can be buying support here, buying the trend line. There's different ways you can do it, but it's all about risk in your portfolio. You can't be putting as large of a sizing as you can over here, right? And so some of these times, it's in terms of opportunity cost, risk reward, you wait, right? Does it make sense to go put all your portfolio on Apple calls yesterday? Certainly not. Certainly not. Could you take CBAT yesterday? Another good example, right? How do you take this trade yesterday? It's pretty hard to take that trade yesterday, right? It's pretty hard to somehow take that trade other than from open, right? From open the day. And there's not really good answers, right? If you're in the trade from over here, you're basically break even by close. Maybe you say, well, I got support underneath me. See you later, fellas. Sure. And again, I'm talking about from yesterday. Most people had already entered the trade. Those of you that are wondering, this trade was already entered. So this trade is entered from, again, I put the candle this here. We were already prepared for this one. You can really finagle on this one. If you go look at what's going on over here, charts look a little different. This is, we talked about the supply over here. The way that everything was reacting with sort of this supply in here is probably a critical point. This sort of $8.10 mark. Go look at some of the supply over there. You're gonna see it. This gap and everything, again, just think about the amount of supply in here, right? We're gapping right onto the supply. You're gonna have a good support to buy on. It's a pretty damn good buy today, right? Forget about what happened down here. You have a whole level of support in here. It's gonna be interesting, of course, to see what happens in there. Again, so I want to talk about this a little bit because, again, we've had such a big sort of difference, but we've been talking a lot about this idea of convergence. So there's been a big difference between the NASDAQ itself and mega caps. Mega caps have been very much being outperformed by the rest of the market, right? We've been talking about these intermediate tech companies, smaller tech side. Growth has been doing well, but not on mega caps. Mega caps had their wins already. But it usually will converge and come around. Amazon here is break even from the start, but this trade from Friday for the long trade looks very good still. I think the trade that it took on the short term here was very good. This continuation is doing does point to the upside, but there are some difference between some of these candles, some of these charts when you look at them. Like Amazon's break even right now, and then you look at the Apple side. Apple's up 76 basis points. You start to look at some of these, like where are these and which are going to catch up? And we talk about that. Sometimes you've got a lagger and it's going to catch up to those that are leading. Not to say that Amazon had been leading, but something like this is certainly further behind than something like Google, right? Google is significantly higher, right? Much higher than that September high. So when you look at this, who's going to catch who? I mean, this is significantly higher. That's about 10%, 15% on that Apple chart to get to a relative point to here. Do you think that it's not going to? This is where you do need to bring in some like storytelling because it's going to bring in the philosophy of other traders. More than likely, they're thinking, okay, Apple, largest company in the world, most liquidity. Okay, I can probably get away with putting some positions on. So when you think about over the weekend, which of these are going to be making moves, you want to be in the one that's going to make a move, not the one that's already made a move. Not to say that these are not trades that you can't take, and there's going to be opportunities, I'm sure. But you want to obviously be thinking about some of these things that, okay, you know what, let me take the trade where I get some points to enter because it'll reduce my downside by not buying, above levels. This, for instance, opening at 57.85 is going to be opening on support here. We've got this idea of a trend break here. These kind of charts, instead of it being up here that we're buying, down here, of course, support buying is important. Today's going to be a big day, just like yesterday, for support buys and like last week, right? This is going to protect your downside and allow you to put the risk on that you need to make some fucking money for once, right? Stop buying at the top and then trying to sell down lower because you messed up. You got to be getting some of those buys at a little bit lower that you believe in. You believe in some of the moves, but you're just at the wrong time. You take the trade when the opportunity is there, and then you can manage it because you're not going to get hurt after you've entered the trade that's already starting to move to the upside, right? So there are a lot of trades that are in here. Again, I hope for some of you that you did take some time to look at some of these trades and how you would trade them. Like, I know some of you are going to want to go trade this, but did you actually take a look? Did you actually look at what's going on over here? Did you look at the contracts? Because if you didn't, some of you, do you even know what price you're going to be putting? Like for the trade here today. Tell me right now what I should put for a limit price on those open 35s, the March monthlies. What should I do for a limit on that? I'm going to put the algo on there and it will spread, but what do you think I should put for a limit on that open trade? 99% of you have no clue. You get no clue. You're like, well, I mean, it closed at like 285 or something yesterday. Maybe like, and it's going to be gapping up a little bit, like 4%. So maybe that goes to like 350 on the contracts. You've got no clue, right? And so you have to wait. This is where the problem comes, is that you're waiting for the market to open, which you should be doing to see what the orders are. But you already know you're going to take the trade anyway. But so during this time, you're sitting there and you're trying to calculate, oh shit, it's opening up at 350. Okay, well, how quickly is it going to go from 350 to 4? And you're doing that in the moment, and then you're trying to do that for every single ticker you're trying to possibly trade, and you don't know which one to do, and so then you make a bonehead decision to do something. Again, that's just being prepared. You can remove all of that by being prepared. Go look at how it's moved every day. You can see how it opens. Go look at that opening candle and figure out what it does. A lot of the times you have this open contract, it's going to open, and it's going to wick up a big wick, right? It's going to have a big wick heading towards the upside, and then it's going to pull back, just like the market does, but it's going to be because of that volatility of everyone sending that order to the exchange and not knowing the limit and what the price should be, because again, the market's not open yet, and you just can't even see it, right? And so they're going to all send that shit, and it's not going to be very peaceful in there, right? And so, again, think of the prep side. Again, if you didn't do it, you just could be careful, right? You just got to be careful in terms of your understanding. Anyway, fun trade. QFIN continues today as well. Blink, I posted the bearish chart for in case this breaks down. I finally figured out what exactly is going on in this chart. I think this is probably, some of you will agree, this is a really pretty chart. I think when you think about some of the things that we talk about in here, this is a really pretty chart in terms of a channel, the understanding of the price movement in here. Before, I just said this is just kind of, it's trading within a support and resistance, on an angle. I think this is a very pretty chart of understanding with this neckline. If price is above this neckline, it's a bit more bullish. If it's below, it's bearish, but you've got support. I mean, I think that's a very, very pretty chart. So, yeah. Can you please talk about the bullish piton candle? What makes it bullish when it is in the dumps, says Wiz. What makes it bullish when it's in the dumps? Okay. First of all, again, when I post a short-term pattern, I'm just talking about the candle itself. This here is a bullish candle, is what I say. Whether the chart's bullish, bearish, or not, this is a inside bar in terms of it's a higher low, right? Yeah, it's broken out of this trend line here. All I'm signaling is that through candle patterns, short-term patterns, that this is a bullish candle. Whether anything happened here or not, this is a trend into a bullish candle, which when we talk about what a short-term pattern is, obviously it's not an overall sort of bias changer, but it's in the short term and sort of like a +1 for the bullish side. Maybe the bias is sort of like -5, -6, so it's maybe still a little bearish, right? I would say overall, Peloton is bullish on terms of a trend. It's consolidating, of course. We tracked the consolidation. It decided to continue, but it's not really out of the woods to say that, well, overall it's bullish. It's going through a short-term bearish phase. Well, if this is a short-term pattern, then what are we thinking in terms of a short-term trend change? Well, this candle would signal a short-term trend change, probably come up to the support, into the resistance here, right? So, again, when I post those, I'm just talking about, I'm not telling you the candle, the chart all of a sudden has changed. You can go look. There's plenty of examples where the chart is terrible, and I'll still post the bullish candle because you need to think about it, right? If there's a chart that's, I was going to post the win. There's a breakdown on the win chart, right? I was going to post this candle yesterday that there was a breakdown in terms of like a wedge in here, right? You get the downtrend here and bottom wedge breakdown. I wasn't going to draw the line here and show you that's going to 98 though, because it doesn't make any sense, because overall it's bullish, right? So I'm not going to go put this chart in here and say, yep, downtrend, bearish wedge breakdown, it's coming in here. That's just a plan, right? It's just a plan, like the Tesla chart. It's just a plan. I'm not saying it's going to happen. We're just planning for if that is the case, right? But there's some trades, of course, I'm not going to do it. But otherwise, short-term patterns, I always throw it on there. I don't care. You guys can handle it. In terms of the UPS trade as well, UPS got a very, very bullish day yesterday. This is what we're looking at in terms of levels on the chart. You've also got some trend ideas. It's going to be important to figure out what the trend is. I would just copy from the chart we had before, this trend line over here. Copy that over there, most likely on the, there's going to be some sort of understanding. I would just average these through here and see what exactly goes on. But it's about 159.5 in here, and we're trying to trade at probably like 172. You can short term probably March up, March up to March. In terms of some other trades, right? Things to think about is something like X today. The understanding, I mean, it's such a hard chart to look at now. We get 12% on this candle here. Obviously over 100% on just about any contract that you bought. Reversal, a rejection at resistance, so a take profit there. Now you've come into support. We talk about a red daily candle pull back into support, and then the next daily candle you buy on support. It's the same thing again. It's a great pullback candle into support. Today, when it opens up, if it opens right there on support, it's the same buy again, right? Nothing's changed. We're following our rules. These kind of trades are going to be the bread and butter of what goes on into next week, just like it was, or like it is every week, right? Just like it is every week. Over here, I would say this needs to climb back into the trend, or we're going to continue a longer consolidation. So I know a lot about, you hear me being like excited about green stuff. I don't care if the market's up or down. We're going to trade it either way. So I think some of you really want everything to move. It doesn't need to. This could be a longer consolidation and come into the trend line here. So if this is going to continue to the upside, and this is going to be a significant leader, then it needs to climb back into the trend line probably today. I would say it probably needs to climb into the trend line today. That's about 2% up to there. So, you let me know whether you think the Russell 2000 can do 2%. I say it does. I would say higher probability. 2% is a big move for an index, but I would say based on what we see, it's probably likely. It's probably likely. It's not crazy. We're opening up, almost 1% higher. It only needs to do 1% intraday. Based on inflows, it probably does it by lunch. So we'll see. But again, just a reminder, like if you want to get a part of some of these trades and you missed it, then go on to the next trade, right? You missed it. It's not that you can't go buy something if it's already up 500%. Nope, we don't care about the percent value, but there's times when you need to be following rules. So there's a lot of charts that are pulling back. Buy those ones. Again, those don't have a downside risk if it's going up from the open. If you're buying something that's all the way, you're buying it through like these moves towards the upside, and you're like, I'll catch it. There's still more buyers. You're just guessing, right? Don't be a chaser. Capture it. So we don't have anything really new. We're going to be managing positions, possibly a lot of support buys today, a lot of all-time high breakout sort of chart days if that happens. Otherwise, listen, we've had the groundwork all week. We've had it all week of understanding, pushing long positions. Now those of you that are getting finally your gains on those and the rest, and you need to now think of, again, you're not thinking about today, you're thinking about next week. So if you're going to put something on today, you need to be thinking about, okay, where's the price going to be by the end of next week, right? Or on Monday at least, right? There's plenty of reasons to be putting risk on here, but if you don't have the space for risk because you already got really risky trades that kind of, you're one of those out of the money short-termers, you can be careful. You can be careful about putting more risk on over the weekend, right? Think about our understanding of what's strong right now. We, of course, are favoring tech a little bit in terms of some flow ideas, but still value is the sort of the king right now. Those charts that are retracing, those travel charts, those retail store charts, those charts that have that big spike upwards and then started consolidating, those charts are going to make moves. REITs, banks, that's all the value, right? And then when we think about some of these other charts, some of these new breakouts, those new charts that I posted, those breakouts, it's because they're getting demand while some other charts are losing favor. You've had to be prepared. I wouldn't be searching today, right? I wouldn't be, if you haven't already looked, I wouldn't be searching too much because you're going to be chasing a lot, probably from the open. So, careful. All right, let's do it, boys. I'm excited. I am excited. Okay. All right, let's go. Open me. Got a lot of buttons to click. Oh, buddy. Click your buttons. Click your buttons. Okay, good start. I'm imagining there's going to be a lot of different tickers that get posted in the chat today. So those of you that like to trade on your fellow, off your fellow traders, good luck. You can see that elevation over there. Oh, by the way, we're getting filled on the open contracts. Good job, boys. It's already green. Must have got good prices. Average 333. Oof. Oh, guys, you guys get the fill of the century. How do I show you guys this on I really can't, can I? Sorry. Value over here, holding as well. Apple. We'll see if we get blown. So far, top of the list. FUTU, CBAT. MP, Plug, Maxer, Sabre, apps. We've been talking about apps. QFIN, VIPs, Fake Neo, Trip, SSYS has been mentioned a lot. Hooyah, coming back. CCL, Death Boat. Ooh, baby. Get on the Death Boat this week, boys. All right. Do we have room for one more? We get 8 contracts for 336, market value of 27.20. We've got about $510 left. I don't know why your screen's bugging out over there, boys. The chat says apps, cake, GM. I'm going to quickly screenshot for you guys because I don't know how to do it right now. If only I had someone that could do this for me. Yeah. Just give me one sec, guys. I'm doing multiple things now, and this is very out of my wheelhouse. Okay, everything's holding value, so nothing of note yet, right? Nothing of note yet. Ecto says like an intern, exactly. If only there was someone that could possibly do this. Here's the open side. The open side, you guys wanted to buy from open, didn't get any specific, so here's what the trade looks like. Is that right? The right screen? Yep. Let me put it in the chat. I'm put it in the prop desk. There it is. Boom. Upload it. Boom. Okay. What are we looking for? We're looking for around 10 o'clock. We want to know from the big boys, the institutions, what are their plays from going into next week? I think we have a good understanding from yesterday. This move that started come 2 o'clock or so, coming out of break, out of lunch, we knew which way they're going. We've got a lot of room up here to work with. Again, this is where I talked about getting those pullback buys today those are going to be the trades, right? Those are going to be the trades. We do have trades that are continuing towards the upside that are just continued trends, right? Continuing trends. But still, those will be the trades for sure. AXTI, FUTU, EH, Maxer, that move there. APTO, plug. Yaps move, of course. We were trying to theorize what exactly is going on up there. Well, there you go. I think you got it. You got it. QFIN continues, VIPs, MP. Obviously, MP. Now you're making some decisions up here from down here, right? You're making some decisions. You've got a gap. Where am I transitioning? SunPower, nightmare fuel of some of you that, well, what am I doing in here? I don't know. It's a bullish candle now. I don't know how you're entering over there. NVTA 4780 support. And we're watching. There's fake Neo on that support there. Deathboat continues again. What I say yesterday? Don't get shaken. Do not get shaken out of that position. You're gonna regret it. DraftKings, we're still waiting for that break up here. I know there's people that bought down to the trend line yesterday, but you're waiting for that. You're waiting for that break, right? That's certainly, we're looking for retail. What's retail going to do today, right? We'll see. The open trade, again, you guys let me know how you want to get that managed. We get filled at a pretty good price at the open, but you guys let me know. I put a stop that's like below down here, so, but we'll just actively trade it. Airlines continue. Let me show you the pot stocks. Pot stocks, we're looking for this trend line to come back in. Possibilities here for taking this trade again over the weekend for some available risk. Airlines continue. Again, what about this move? What did I say? Everyone's going to be pissed when they miss it, right? And we talked about these moves. There was almost no reason not to take this trade. What do we talk about over here? Got to be in this trade. What do we talk about save? You just got to be in this trade. Some of you are looking at the chart and going, man. What about now? Stop. Z, perfect trend line move here. That Z move, actually. What do you think? All time today on Z? This move, these charts, again, do not sleep on these charts, guys. These ones that we look at that have this very similar pattern across the board. If it's a bullish sector, the chart's been bullish, we're taking them. That Macy's chart, of course, looking good. Again, bios and everything, we're continuing the aggressiveness on those. TCOM continues. Again, this whole travel thing, I mean, geez. You can't sleep on those. Dirty Dan, possibly Dirty Dan. Looks like Monday. Varu, coming back from that bounce. Sabre, again, we've been talking about this move. Up here, now you're in management mode of, okay, what am I doing up here? I would say it's a push. Very good stuff so far. And again, I mean, most of this is just managing today. Again, which says Apple, sleeping giant. This pullback, we're coming into the last 5-minute candle, right? This is where we kind of talk about, all right, we're tightening. We've got a higher low so far. Is this where the move starts for the day, right? When we talk about Green Fridays, you get this 9 times out of 10. Get it 9 times out of 10 off of a move like this, right? You open higher, you get this move, and then you go. Is this your moment? This is where you should be buying, right? This is where, when you're watching, those of you that are just sitting there waiting for that order, ready to get it in there, you of course do it when the chart is coming into that tightening. This is where the spread starts to tighten, and that's when the buyers are going to be now turning over, right? That ratio is going to go over. Instead, there it goes to the sell side, as I say that, try to make a point. But again, you're looking for tightening. You need to see the tightening first to then go get towards the upside. If you're buying on the way down here, like you guys did with your open contracts, right? You're just pulling back when you can just wait for that pullback, right? Wait for the pullback to go to the upside. I could just make fun of you guys for you don't really have the ability to manage that trade. You guys bought it open. What do you want me to do? Oh man, down 1% already. There you go. This is what I mean. Some quite the spreads in there, by the way. Is the traffic coming? Oh, buddy. My mom sure would love a house. A lot of these charts at break even. Again, that's the kind of tightening. There are some charts in this house. What eBay, boys? That's quite the violent move there. Quite the violent move. Still consolidating onto that level. PayPal, okay. These kind of moves, look at these candles. I mean, possibilities. A lot of possibilities up there. A lot of possibilities. At least in terms of a signal. It's at least flashing some sort of signal, right? Piton. See how that continues. Again, you shouldn't be buying that. When I put that short-term pattern on there, that doesn't tell you to buy it. No excuse. Sono continues that. I mean, this move has been very good as well. We talked about it when it came through the trend line. Then the transition idea up here. Now it's got this pennant idea. That's a see you later. $50 coming. Yeti again. We talked about this, wanting this trade. Nothing there yet. Banks continue to look good. I mean, again, I know some of you are now in hindsight understanding from what I say every day about the bank thing, but again, there's really, it's for something that moves so slow, right? It's, you got to really go figure out what, yeah. Like those of you that don't always have all your cash working for you, it's a good example where you can go put a sizable amount of money, right? You don't need to make a significant percent, but you're still gaining, right? That's why we trade some of the larger trades, because we can put more cash into it. Yeah, it may not have as high of a reward, but we can get all of our money working for us, right? That's a big difference. Instead of having to make 100 small trades to add up to a percent, you can make just one big trade that's easier to manage, less, strain on you, and you have all your cash working for you immediately, right? It may actually add up to more than all those small trades where you're not 100% into the market all the time. So it's a good example of a trade where you just take this trade anywhere and you can get a lot of money working for you. Most of you is, and you can manage it and go take some out, go put it into another short-term trade, maybe, put some risk on with it based on how well you're doing that position, right? And Chinese tickers looking very good. So a lot of different things going on with the Chinese tickers, but again, all of them are just, again, you got to see that move when it's happening. We're pushing these over the weekend. Again, we're bullish on a lot of the Chinese tickers. It's gonna be very interesting to see what BABA does today. Not even from like a money making standpoint, from the chart. This chart is a mess. It's a mess over here. A lot of uncertainty. This consolidation has really turned into sort of a clear-cut trade into nobody knows what they're doing over there, for sure. Nobody knows, and I think it's just getting so stuck in this level. It's just so attached to this level here, like it did over here, that, it doesn't look very good anymore. I mean, it doesn't look very good anymore. I mean, I shit on this stock for so long, so it still looks like shit over there, but again, I think you're going to get convergence with with sectors, and we consider China as a group of tickers on the exchange. That Tiva move as well. I mean, this is so close to just preempting this trade. You just look at this. You are so close to seeing this tightening and going, all right, my probability of this going to the downside is so low, and the reward is so high that I might just need to get in there, right? That's kind of, you go, well, my reward is so high the possibility of this breaking down is like very minimal. That might be. Can we get a couple more lines on that chart, man? That's that kind of situation there. TME is going to be interesting here today as well. This move has certainly generated some volatility, and also traders doing the same thing where they're willing to buy up here, but then they're not willing to hold, but then they're willing to buy again over here. It doesn't. That's just bad trading, right? OSTK, it's going to be interesting to see how that continues. Again, we just sort of transposed the supply, but very bullish. A lot going on. A lot of different things going on. Going to be very interesting to see, right? By the way, boys, you're doing very good on your trade so far. Now, what I did do for your first trade, we kept a little cash on the side, so we got filled on 8 contracts, right? We still had like $500 left. I just went ahead and kept that. I only put in for 8, so I could have put in another one there from the open, but we'll keep it. We'll keep it with some cash because I think it's better if we don't go into margin or anything, and if that pulled back further, then it would have tapped the cash. So maybe I'll use a little bit of a buffer each time I do it. That will be my side. That'll be my decision. Little risk allocation. But yeah, for instance, though, for those of you that want to take this trade as well, what do? We wait for the tightening. We buy. These are very straightforward. It's very straightforward from the open, on open. This move, again, that's what we look for. That's a perfect move that we look for. EVs, again, these kind of moves here. See, you start to see this. This I'm taking every single time, right? I'm taking this every time, whether something's been bearish or not. This move, if that just breaks through here, see you later, right? These kind of moves here, there's a lot of tickers out there that are going to just generate a ass load of momentum today, right? Green Friday is going to look like fucking Christmas to some of you that are making bonehead trades, and you're going to think you're doing great. I'm not talking about like some of you guys. I'm talking like there's going to be traders out there that think they made great decisions, right? Buying dumbass contracts, right? And that's why they keep doing it, because they make profit, but they're gambling, right? And then eventually get blown up. This is like a chart where you're waiting for that break here. You basically have it. And then you get this trend line. See ya. You take that. Even though it's a retail trade, you can get some boogeymen. Get some boogeymen in there. See a lot of mentions of Uber. Uber, of course, you're coming up. Again, this is where you have 2 chances, right? Support, like we talked about, or you just get the trend line break here. I think you do ignore this up here a little bit. You do ignore the wick up here. You go with the wicks that you've got. It's coming into resistance here. A lot of the market's coming into resistance. A lot of good moves. TCOM doing very well today. It's going to be, it is going to be interesting. Here you go. Look at this chart, right? Let's be honest, like this move is just all-time high next week. All-time high next week kind of moves, right? Kind of vibes. GE, again, when does that get entered? Again, if you're not in there, maybe this. You average those wicks in here. That's a nice one. Nice diamond in here. Lower lows, higher lows. Higher highs, lower highs. See ya. That's a very nice one. Again, all of these charts that are linked into this aerospace and defense sector, right? The ETF hasn't exactly moved yet, but we have a bunch of tickers that are in that. Like some of you guys like the tickers just for itself, but the sector itself, all of them are moving. This move with the ETF is a way to, with reducing risk because of the ETF with liquidity, but also since this is a 3x, you get some serious points. But again, you can just trade the individual tickers, right? Like GE. But again, that aerospace and defense, those tickers that we've been tracking are just they're gonna explode through some of that supply. Like some of you really like those charts. I mean, they're gone, right? They're gone if they break through, right? Maxer is one of them, right? That trend line breaks and this goes through. Look at that continuation triangle, symmetrical continuation triangle. Would you like to see? See ya. QFIN, I mean, again, that poor move. Tech coming through these converging levels. That looks interesting up there. CCL, run. Again, here's run. Now, if it holds support, again, think about some of these, right? Some of these, if we post the idea for the bearish idea, it pulls into support. We're support buyers, and we've got an overall bullish understanding for the sector, right? So again, don't be afraid when I talk about two different plans of going long or short based on if there's a breakout or breakdown. These kind of moves, again, we're bullish on the sector. Keep these ideas in mind for those of you that were worried about some of these charts. You know, I post like FSLR is going to tank. Yeah, it did. It doesn't change the fact that solar and everything is bullish, right? So don't let that stop you. It's fucking volatile out of its mind, right? There's so much volatility, you have the option to trade it both ways. That's the important understanding or takeaway. There's some fucking trades out there, I'll tell you. This, like, how do you enter this over here? You get the trend line break on you buy there. I mean, this kind of one, I don't know about this one. This kind of thing is just difficult decision to make there. I would not do that. It's just been too bearish. That first bud candle on the outside, right? We talked about if it gets pushed into the apex, it's just going to squeeze out. But it's got no resistance now. RTX also with that, again, they all have this resistance, right? They all just have this resistance. The amount of points that it makes from in between these zones and how quickly it's going to move there. Like I know some of you know the charts and remember how quickly price moves in between this level, but it will literally skyrocket through this. It will just go put any of these charts will just go put 10% on immediately. Just go put 10% on immediately that day. It will just do it that day. So if this comes through today, these charts will just go do 10%. Like it's not even there's not a question because everyone in the market understands how much supply is here. That's the difference, is that everyone understands the supply on these charts because it's been down here for so long and we know the reason why it's down here, right? And so everyone will agree at the same time, oh, okay, there's no longer sell pressure. We're buyers. Well, we know where the price can go and it will just go immediately. So that's why we have to watch these charts for so long and prepare for them because, you know, if you're missing those trades, you're going to be having some serious FOMO. Cake continues. She's got that cake. We talked about this SVMK move from down here. I will take the trade if it breaks through here. I think it's kind of a good risk trade. The X chart, of course. I mean, for most of you that have been trading this frequently, you know what to do. Talked about it from open. Oh God, there's gonna be some FOMO in chat. Trend line comes in at 21 on AAL. See ya. Trend line is 21 on AAL. Those of you that did not get travel still are going to cry later. CCL is 29. There's going to be a lot of money making. I will tell you. A lot of fucking money in this chat. Collectively, we probably, as a group, how much do we have in travel as a group? Probably, we haven't really ever thought about these ideas before. But they're marketable, gloating ideas. We probably, as a group, have what? 250 to 500. 500 sounds a little high. We have at least 250 grand in travel in the group. If those make 100%, okay, there you go. I mean, actually, they're already up 100%. So, hold on. We may actually be in the 500 area based on some of the people in here and their blind devotion. Tell me where to put it. I'm closing my eyes. My hand's over my eyes. Tell me where to put it. I'm talking about trades, guys. You're sick. Fucking sickos. Sickos in chat. Boys, you've made $400 so far on your trade. Good job. Good job. You're up 13.5%. Good job. What's the close on that trade? Expiration, hold forever? Whenever you fucking guys tell me to. I didn't get any specifics. We've got the don't blow up the trade stop in there for now. You guys let me know. You guys talk about in the prop desk section, okay? If you guys want to know. Otherwise, I just push the trade, okay? And if it loses and gets blown up and gets stopped out, it gets stopped out. I get the stop fucking pretty low, so you're gonna lose about half that value. I'm not putting no trailing stop bullshit or anything unless you tell me to. So I think the stop down at the entry price is probably the best. I do need to find a way to put it on the screen for you guys. I can't do the full screen thing because, again, it's my other broker I can't put on the thing. I can try to create a little thing for you. I'll do it. You guys can survive for now. What do you guys think about oil? Like, actually. Do you think that like the crude oil, when you look at that, excuse me, when you look at this, do you think this goes up further? This continues? When you look at this chart, this is crude oil. So from like an economic standpoint, however you want to do it, do you think this continues? Yeah. Okay. Just everyone give an opinion, because this isn't you guys, obviously, and this is just pure economics and everything. But you know, we have a lot of shit tied into this. We have a lot of energy ideas and everything tied into it. And this is just a move that's just, you know, a lot going on. We've retraced. We're coming into this area, you know. And then again, for this to go up, for those of you like, well, what does it mean? For this to go up, it means that we're recovering in from like an economic standpoint in terms of COVID, in that everything's gonna be reopening, people are gonna be, shit's gonna be going on. There's gonna be activity, right? This is projecting a lot of activity, whereas obviously, we didn't want to get our hopes up earlier, but now it's really starting to move, right? Oil never goes away. It keeps going. Okay, it keeps going. Boom, boom, boom. All right. Let's take a look at some macros here. Spot VIX. Spot VIX really dropping. Really dropping. The dollar. Same old, same old. WKHS went through. BLDP, this thing over here. Dear God. I don't know what that line is. What a move. What a move. What a capture. What an absolutely beautiful trade. This again, I do want to make sure every time that there are big trades that we talk about them in the sense that not from a FOMO standpoint, but from a profit-making standpoint and from a trade that could affect people here. This trade, if you took this from Friday, when a lot of people took this trade, capturing this move, right? You're buying when the ticker's been pretty bearish, pulling back, in the midst of pulling back. And then for it to straight line, not any stops along the way. No stops along the way. This train went one way. This boat didn't stop at any islands. And you still don't know your destination. You're just on the fucking boat, but you're going further and further. You're 21% on the underlying in a week here. 4 days trading, guys. 5 trading days in total. A week of trading. This here, for most of you, for like half of you, not the big boys, but would, if you put in, a normal amount of sizing, would be, a significant amount of money to you, right? Be a significant amount of money to you, right? And you got to just realize when these opportunities come. The last time we took this trade was over here, right? We took this trade right here. These opportunities don't come all the time, right? We obviously track a lot of different charts, but these opportunities don't come all the time that you can just say, oh, well, that's okay. It's okay. So, and it is okay if you miss it. It's about getting the next one. And so it's important that you understand, and I always talk about it from the profit standpoint. It's not so much this time. You want to be able to get it for the next time and the reason why you want to think about it is for what you can gain here, right? 500%? What's 500% of your $25,000 account, right? Your $20,000 that you put on $10,000. What's a 5x trade to you, right? When you think about some of these things, that's when you start to go, okay, maybe I need to be a little bit more focused. Maybe I can do a little bit more because all I had to do was just hit one button and I watched it and thought it. Like, how many times do you guys say, like, oh, well, I had that idea. Like, I could have done that. I had that idea. I'm sure all of us thought we could have. We all had the Facebook idea, but we didn't make Facebook, did we? And fuck Facebook, but still, we didn't make Amazon. We all probably had the idea once or twice before. These kind of things, we all have the idea, but you have to actually do it, and that's where it's what's going to happen there is significant. And again, you got to be able to do it. And I think so many of you are so close, you see it and you're there, and then it's just a confidence thing. You just got to make that trade, because again, you make this trade. This is a 5x at minimum. 5x at minimum when you had no downside. You didn't even have a downside based on that trade, even over the weekend, because of where the contracts were. And all you had to do was just be there, right? Right place at the right time, hit the button. I know for some of you, well, it's like, well, I can't put more than this amount. Then even if you only put $1,000 on the trade, I would have to imagine making another $5,000 on top of that would be a pretty significant trade to you then, right? Even on the small side, even on the smaller side. And then the thing is, it's not just that one trade. It's to be consistent with that, right? You're going to have losses and everything, but I just want to always make sure we emphasize it for those of you that this is what you're here for. This is what you trade for. It's not always going to be there, right? The trade's not always going to be there, but when it is and it slaps you in the face, you got to wake up, right? And you've got to make the trade. And again, those of you that do, you get paid for the risk you put on. The larger your sizing, the more you're going to get paid for. And that's where when we look at a trade like this that didn't have risk involved with the entry, I mean, there is a level of risk to every trade. Nothing is absolute, right? But when we find a trade that has a significant reward, that we can track, and then the risk is right, that's when you start to go with sizing and you go, you know what? I'm going to break my only 1% per trade rule, because that's ridiculous. You don't need to have a rule all the time. It's good to be consistent, but there's times when the opportunity arises. You put more. Again, you put $10,000 in the trade and you just made $50,000 in a fucking week, right? 20,000, you just made 100,000. Made 100,000 in a week. How many of you haven't even made 100,000 a year from your job before? Right? Those are the kind of things. MGM opportunity, yeah. Again, all of this travel, I think, again, when you think of sector convergence, it's a good point. I'm glad Brian brought this up. When you think of what we've been talking about with sector convergence, a chart like this that's been consolidating its move, think about everything else that's breaking out currently in the last week. This chart was consolidating its break. It broke a little early, right? This chart broke a little early. Does that mean it can't continue its move? Absolutely not. Just because it moved earlier doesn't change that it can't make a move. And I think when you look at these, they're all a little bit different. And so there's going to be different risk allocations there. Even Marches, I think, are you're going to be okay. And you're trying to get short-term moves here, especially those charts that look like flags, right? Those shorter patterns, you've got to be a little bit more short-term oriented. You can't be going, oh, yeah, I can push this for a month. Absolutely not, right? Absolutely not. You can put some contracts out there for a little long-term, but you want to be capturing this gain in the now. It's like that CCL move. No one is pushing that. You can have long terms, but you're not trading that for the reward over a longer term period. You need the reward to be in that moment, so you got to be capturing. Because if you are pushing into like Maze or something on some of those things, you're not getting the real gain there for the risk that you put on for it. You need that reward to be coming in immediately, which is where when you look at these type of charts, you're not taking this trade for the gain in the future. You're taking the gain for the now, because you know you're capturing a move in the now. That's why you take the trade at that moment. There's a couple of good examples. It's like when you do these trades, I didn't take this trade because I'll let it trade around for a little while and then I'll get some gains back on the tail end. No, you take the trade because you think it's going to go one way, right? And that's why I wanted to make that example here. This went one way. This wasn't like, it went up and then kind of tailed around and it takes time. No, when you're trading short-term options, you're not allowed to have a day that it doesn't move. That's where some of you think you can have like a contract that's 1 month out. And it doesn't need to always be going up. You're like, well, you say push trades, not for something that's short term. It needs to go one way or you're not getting paid shit and you're going to lose money. You're going to owe the bank. You're getting margin. You're going to have to get a new phone. Get margin called. That run chart, TCOM, again, intermediary travel as well. So everything, full convergence on that side, full convergence on the travel side. So again, if you miss moves, we do know there's convergence going along sectors that you can go capture it elsewhere, right? You can go capture it elsewhere. DraftKings did get through there. We talked about that level. These type of charts are so good in the sense that it's risky for the retail that's trading this chart because they're buying out of the money short terms, right? If you buy something that you find that sweet spot of risk where maybe you do buy Marches, but maybe you buy a little bit in the money or something, right? These type of different moves you can make. You buy Aprils that are at the money. Everyone else that's trading it, it's risky for them because they're buying risky shit. It's usually trash and junk they're buying, right? You can maneuver on these charts by just being smarter, by not being a bonehead, right? By not entering too early. Let it move a point, get through the support, and then go put on contracts that have value and that are worth something. That at some point maybe someone does take the option, right? China, China again looking very bad. Z has stopped moving a little bit. X, obviously, we're pretty excited about that. That's a great weekend trade, even if it doesn't move any further. M talked about this. I am a little surprised that this hasn't moved completely yet. I would say it's going to, based on what we know about these charts, which is why I'm fine with being in some of these trades. Again, airlines continue as well. Those have been trades we've been pushing for quite some time now. CHX. That's gonna be that's lined up perfectly with the timing there. That should be good. We'll see. We're not gonna we don't get to tell ourselves stories or anything. Looking good so far, but we don't let the story or ideas overtake just the price, right? We're gonna react to price accordingly. LX continues again, now breaking through that high. That pullback, great opportunity there again if you missed the prior move. MP still here holding value. That's what you need to know. Still there holding value. Take a look at the Nike chart. Nike pulling back into support, still a higher low, and it posted a higher high. Demand certainly going elsewhere for retail stores. This is pulling in though. That is an opportunity there. Where's the rest of that demand going is the question. Guess it would be a different sector. Doesn't need to specifically be retail stores. Twitter, of course, we're still very bullish on. Semis, we didn't really talk about semis too much here today or anything like that because a lot of these, again, are the sector itself is bullish. But in terms of opportunities here, it's hard to say if any of these are good for the weekend if you're not in this trade. I can't recommend any. First of all, I can't recommend anything. We're fully learning purposes only. You can't just go take this trade randomly. If you're in a position, you can push this, of course. Otherwise, I don't see. AMD still bearish, of course, looking nasty. Time is it? It's 10:16. Again, this is really the only thing that matters here. This chart I said needed to climb into the trend line. I said it would happen before lunch. There you go. Some of you went, whoa, that went 2% in an hour? That's right, 2% an hour is my speed, baby. I haven't driven in 10 years, but I can still go 2%. I could certainly run faster than that. And we've ran we're running. That's a great move, and the trade's aligned with that, solidifying it, right? That's what you want. Now, when you get this pullback into the trend line, it's hard to say. It's in the trend line. That's basically the candle could finish right there, and that's what you want, and that's what you would need to see for the upside to continue and for that all-time high push into next week. You would need to see that. So what you're going to need here is a pretty good hold on that support, and you're going to probably need to put more points on, almost to the point where you need to reach this trend line up here to be able to handle any pullback during the lunch. If we have a lunchtime pullback, which it's going to be probably rare that you get a lunch pullback today, unless you put a lot of points on. If you put a lot of points on, then you're going to get lunchtime pullbacks, of course. I would say it's more likely that you get it towards close, right? That everyone comes back from break, 2:30, pulls back a little bit from, if there's a melt up lunch, then it's going to pull back 2:30, and then in close, so it's a pretty bit at close, right? I mean, again, that's just, well, duh, doesn't it do that every time? Yes, but that's why we can confidently talk about some of these ideas, which is important for timing, of course. Can't perfect timing, but if we know when people go to fucking eat and have a break, then that's helpful information. Ooh, everything in this 2% range is definitely looking good. Is that just gone? What's going on over here? Very low liquidity. Who cares? Treasury yields. Everyone's selling their treasuries. Fuck bonds. GE was still waiting for that trend line. SVC. Ah, right, Under Armour. I was doing that thing. I was like, okay, what is the one that's opposed to Nike? I'm like, Jesus Christ, where would the demand go if it's not going to Nike? There you go. Again, we talk about retail stores being super bullish, very bullish right now. There you go. That's where the demand is. It's right there. Jesus, I could not remember. That's your fault, chat. I couldn't remember. Under Armour. There's the move. Flagging. We just talked about it. Again, retail stores converging as a sector towards the upside. Very nice move there. That's probably enough to get a chart. Probably enough to get a chart. And again, you can trade. We've been talking about this. We were talking about this. This trade over here, this is all of those retail stores that we took together. Some of them turning into, these trades that this is the same place where you saw this kind of a bit ridiculous in terms of blowing the top off there because of just the way that the supply came off and we only had demand, and people suck at that. People suck at that trading. Where is McKees? McKees must be working recently. When he was going, you're just mad you missed the F cell move. Be like, yeah, but you're just mad you missed the V cell move, sucker. The V cell move, F cell, KSS, a little bit more, not as bullish. Certainly a little bit slower. You would need a trend line break here, but yeah, I would say it's similar. It's certainly similar. If it breaks the trend line up there, looks like it basically did. It actually, the candle's on it right now, so, and it's hard to say. I mean, it could, you get different ideas. Sometimes we do that, right? You could say it's right there. It should be obvious, right? If it's going through the supply there, it'll be obvious. Oh, it looks like it pulled back into it. There you go. It actually pulled into the trend line. No, you don't have to stay away. Like it's just you just need the break to happen, right? That's a break over the trend line, a pullback into the trend line. That's the same. These are all retail stores. They're all bullish, right? This is a very bullish chart, right? Opportunity cost. Which one do you want to trade? Okay, well that's an opportunity there. So if you haven't entered any of them, then that's certainly looking like an opportunity to the upside. Timing is a little bit strange, but you can't refute the candles that if it's going to bounce here, then it's going, and you look and you see it, then that's it, right? But yeah, again, a good example of no matter what retail store you look at, they are all doing the convergence here, right, towards that upside. They're certainly all looking very good. And again, this is just value, right? There's just so much value in some of these that it's gonna be hard for them not to. Again, this move here, I do want to mention again because some of you are like, shit, I missed that whole travel move you guys did. This whole freaking aerospace and defense thing. Go look up the aerospace and defense sector and find one of those charts you like and get it if it breaks here, right? All those charts, if they break there's so many, right? There's so many. You're gonna be a little FOMO'd because those contracts are stupid contracts. You think the travel contracts are stupid or silly? Wait until you see those contracts in that sector because that shit hasn't moved forever. Travel didn't move forever, and now that it's moving, it's putting points on it. But it put a lot of it on, like on the left tail. This can be on some fucking right tail garbage, that trash contracts that never had a chance that are now going to be putting points on. As soon as those little intrinsic sensors get triggered on the algos that, oh, there's some value in these contracts, shit's gonna be bought. And again, Gamma Squeeze Friday, Green Friday. Don't sleep on the squeezes across the board. Why do you think travel's getting squeezed? It's the fucking market makers buying the underlying, right? How many times we talk about it? The stock market is a derivative of the options market. All of the options that are being bought over here are causing the market makers that wrote those calls for you pajama traders to buy, they have to go buy the underlying to hedge against you. And so they buy the underlying and it causes a squeeze. That's all we do here. Supply and demand trading, right? And guess what day it is? Green Friday. Well, got contracts expiring. Better fucking buy it now, right? Got February monthlies today. The reason why I did the Apple trade is because you get all of those, you got all of those February monthlies that expire today. Hundreds of thousands of contracts. Hundreds of thousands of contracts. I didn't buy February's. But the point is that the underlying is going to need to be bought if there's going to be intrinsic value. Now, a lot of them have got taken off, right? That's what all this is. Just taking it off. All this has to do is move a little bit today. A little bit. A little bit, right? And then they're going to have to do it. And again, the way that this trades on the margin is that for every 1%, you're talking about basically more money than just about every other ticker that we're looking at, like small cap wise, right? Anything that's not a large cap or a mid cap, basically a 1% move is larger on Apple, is larger than that entire fucking company, right? In the amount of that's being traded on it. And so you're talking about a significant amount of money, and so it causes a significant move on the derivative side. And it causes market makers to have to respect that in terms of volatility, that if the move is happening, that, oh shit. And so then that's the whole point of this trade that I put on yesterday. Now, we got a good price, right? We're at a good spot here, so it doesn't need to be today. And it can be further into that March side, but, yeah. Facebook sale. What do I always say? Short Facebook, fuck Facebook. There you go. Bear flag. And when I say that, obviously, that's a more emotional trade and not purely technical, but even technically, this is the grossest chart I've ever fucking seen in my life. For a FANG stock, it's no longer fifth in the, Tesla's now number 5 largest. This is number 6. Number 6 is just a bad number for Facebook. That's a disgusting chart. I mean, just gross. I hate looking at it. It makes my skin crawl. But it makes me happy that I'm making money on the puts, okay? So that's some solace. And all I can see right here is Zuckerberg's face with those little fucking beady eyes looking at me. Want to poke them eyes out. It's trading above the 12-week average. Yeah, there he is, that little face. Oh, he's smiling in that one. He looks cute in that one. How do you like that, Zuck? Shorten your stock, little bitch boy. Post it on your profile that you're sad. Huh? Little fucking robot, beady motherfucker. I think he came out and said he's an anti-vaxxer. Of course he is. He's a fucking robot. You don't need a vaccine. Hey, we're doing pretty good over here, guys. CBAT, we're doing pretty good. Brian's pretty happy right now. Brian got a call out. You get the chart on the map. Oh. That $100 turning into $300. Ooh. Burrito for Brian today. And again, those of you that are wondering, I said burritos for anyone that goes positive on the week. That means if, from what you've posted since Tuesday, if you've been down on the week going into today and you go green on the week because of today, if you were already green, you don't get no burrito. Okay? If anyone was red, I will send you a burrito's worth of moolah because we like to give back in this community. You will be getting a burrito, you pajama traders. If you prefer, you know, a pizza, maybe do a pizza. Burritos are pretty good. All right, what else do we got? I think a lot of you, I can tell the difference in today. A lot of you are probably just in a position that you're in your long positions and you're gaining value. And so you're like, okay, I don't need to do anything else. And so you guys aren't saying shit. Got a feeling. Usually when people are making money, they don't need to look for other things. And then they sleep. You're just like, oh, my position's up. I feel good. I don't need to look for anything else. Sitting on the fucking beach drinking a margarita. We do have someone that's on vacation right now drinking margs. That's why I made that joke last night. By the way, I am so ready to go to Turks and Caicos and get the fuck out of here. This weather blows. Sit on the beach, go inside, do some trading. Not be here in this hellhole. Oh. And it's so dry here in the city. God. You guys saw I shaved my head. I had to shave my head because my head, I was scratching my head so much. I'm not even joking. It's kind of fucked up, but I was literally bleeding from scratching my head of how dry it here is in New York City. So I'm like, I have to shave my head. Like I actually have to shave my head. It's fucking bad. Now I look like fucking Walter White, meth dealer. Got a little bit of scruff on the face. Looks good, but Jesus, you gotta be careful when I walk into your store. You're not sure what I'm gonna do. With the face mask too. Oof. You gotta be careful. I'm progressive, I say. I'm progressive. I'm progressive. I'm a liberal. The hogs, they see me. The hogs see me and they go, oh, is that our, when I do my hog jokes, those hogs out there, those Republican Trump supporters, they see me and they go, amen, brother. One of us. You want to go down there, get a chicken later? I'm like, I'm a progressive. I'm a liberal. Leave me alone. And I start running. No. It's just a disease. I'm not a skinhead. Leave me alone. You be careful. Thank God I live in the city. All right, pot stocks, boys. I think a lot of people already took the CGC trade over here, getting aggressive. I mean, these are so difficult. These are so difficult to make. I'd be curious. Has anyone made a pot stock trade today? From when I talked about it in pre-market, I'd be really curious to see how people are going to figure this one out. This looks fine. If that trend line breaks, this looks fine. And it looks good for going into the next week. But these are really difficult. Like, these are really hard trades. But you're going to get fucking paid on these trades. You are going to get paid on this trade because, yikes. Some of these are... Like, there's a reason why we wait for a break. Because this could get absolutely just oof. But if it goes, then you're getting it at a point. So be really curious. I don't know what the whole story is, but I mean, obviously nothing's changed, and these are great. This is a great upside potential. But there's a time for everything, right? And I talked about it buying on the pullback, but then we had as soon as that started to reverse, we had to take profit on that short-term trade because the sizing here is just too large, right? You get like 15-minute candles that are like 5% and shit, right? It's just too much. It's too much movement. I mean, you've got 3.5%, 375. These moves are crazy, right? It's a crazy amount of movement. So your options are just fucking all over the place. You can't even tell what the price is because the spread's like, it's like Brian said, I have $100 spread. What should I do? You go to put like a limit in at the ask price, you get filled immediately. Like, all right, that was stupid. Don, would you be able to be on at 30 minutes before close today to talk end of the week into weekend trades? Wiz, you pay me $80 a month, buddy. You're really pushing it with the request here. All right? $80, and now I'm going to fucking pay you guys commission on your trades. I mean, let's be honest. 30 minutes, I'll think about it. 15 I can guarantee. 15 for sure. 15 for sure, but 30, I don't know. Where can I mail a check for the prop fund? Yeah, we got to figure the legal side out of that still. That's the problem. If anyone knows, I know Gabe is our tax boy of the group. I don't think we have any other tax boys. But the EIN for our company, I'm supposed to attach it to the account and shit, but the way the API and everything is supposed to work, there's some gray areas. I think you have to donate. It has to be a donation, but there's some tax problems there because if I accept a donation, yeah, there's some tax problems. So we're not going to get into tax trouble. No problems here. GPS, thank you. David mentions GPS. I was just trying to think about the other fucking retail store. GPS, of course, continues. Been very bullish. This is also, I would love to hear what people think about some of the spreads in here. And we've talked about this. There's some charts like TCS comes to mind, things that have this spread where you just hold your long position through because of the potential upside that you have in the fact that you're trading that way anyways, right? These kind of moves, this is what I expect a lot of these other charts to be doing is they should be putting points on that are relative to the moves they've already made. So when you have a candle like this here, these spreads should be relative today, but if it's on the gain size, what that spread causes is a very significant move to the upside. And then the opposite is true for those charts that have had very wide spreads that then tightened extremely over the last week or two, they should then turn back to that larger spread and have a significant move, something like the Macy's chart, right? GPS is a good example that it is getting that spread towards the upside. This over here, this tightening should lead back to larger spreads, which is when we talk about continuations, it is the continuation of a trend, but it's doing it within a shorter amount of time, right? It's this idea within an intraday. So still looking for some of those. SeaWorld, our favorite meme ticker, again, not giving up on us. This line never stays on the chart, but again, when we talk about these moves like this, right, that we draw on every chart, this move like that, when we're like, let's go. Again, Free Willy, those of you that don't know, you miss it each time. This is when we talk about Reddit's meme tickers. SeaWorld, SEAS, Seas, is this group's meme ticker. That it's not even a meme because we've done extremely well on. No one expects the SeaWorld trade. No one expects to Free Willy. This is Free Willy still jumping over the pier. We don't know when he's coming down, but we're going to ride him because we can't let go. You're on Free Willy's back right now. You're on Willy's blowhole. He's blowing. That's just sick. Thinking about whales and everything. But this is a move that, again, you tell me, fundamental traders, tell me the fundamental value in SeaWorld. Have you watched the documentary? Have you seen them open? Are they doing anything? Is there anything good going on over there whatsoever? It's almost at all-time high. Let's put the all-time high on the chart because, oh boy. Should we put the high wick or how about the close? Let's just throw it up here. Something like in here. There you go. Put that in there. I'm going to put a big... Let's put a blue one. How about a pink one? There you go. That's the zone. Free Willy is about to blow its all-time high. And a lot of you are crying right now because you missed out on the meme. Where's your Reddit helpers now? Look at Disney. Who cares about Disney? SeaWorld's where I go. Yep, TCS. Oops. What are you doing here? What are you doing here? What do you think about the what do you think about the DFV testimony when he had that cat post behind him? DFV's a memer for sure. I love it. I love it. I like that in his statement he said, I like the stock. That was probably the best part. I don't know if... I mean, there's so many different things. I think they'll just, because of popular opinion, they'll just let them slide. But there's certainly things they could do. Like, it's... I mean, it's hard to say. And it's hard to say because he's a likable character. He's a likable character, but it's really hard to say, right? It's like saying we're doing nothing illegal here. That's like, it's not true. It's not true. The way the law is, like, the law is pretty dumb. Like, the law is pretty dumb. It is dumb. But people get away with it. You just get away with it. It's like jaywalking. You get away with fucking jaywalking. It doesn't mean it's not illegal. So, I don't know. But the memes are certainly giving him popular opinion. And he's going to be fucking fine, I'm sure. Fucking love it. Yeah, I think there are things that if you just think of the law that are illegal in what everyone has done, but it's too many people. If everyone does something together, then it's too many people, and you can't just like pick and choose who did something wrong, and that because then you start to really get into some gray area of, oh well, that this other person did the same thing, but you're not charging them, and so now you're picking people, and that's where the problem comes in. So it's like if we're all doing something illegal, then okay, can you really? So Let me see. DBX generation dip opportunity. This type of thing. It's the way this opened really. So obviously we were just talking about this tightening in here. We want to take the trend line here. I think you need it down here. You need the trade down here. You've got too much downwards momentum. Oh yeah, so Brian said he's having problems with the getting on the MGM position. Let's take a look. So here's the underlying. Underlying has made an obvious break, and we talked about it. Let me load up the contracts. I'll take a look. Let me take a look. What contract are you trying to buy? I didn't see. MGM. I'm guessing like March. March is. I mean, the spread's tight, Brian. So I'm not sure. The spread is very tight. The volume, I mean, it's not the greatest. So the volume's not the greatest on MGM. That's why we trade some of the others. And at first when you guys kept saying MGM, I'm like, ah. So I mean, the volume could be getting you. I don't see you in here. Are you a part of these bidders? There's just not many people selling. That's the problem. I mean, I see some liquidity getting put on right now, so you're probably going to get filled if you go put the. You should certainly put the limit to the ask price and then let your broker do the rest. The fucking spread's tight enough. 37 to 38. Yeah, you should have no problem there then. I mean, there should be zero problem. There's honestly should be zero problem. It's not very much. I would put the limit to the ask price. I mean, you could get away with a fucking market order. It's not moving, so it's a very, very tight spread. It's just low volume. That's all. You're gonna have that problem because it's low volume, and depending on priority, and if you're trading, I think you're still trading with on the more retail side. Like, you're not gonna get Citadel's not gonna fucking give your order priority if they can't scalp you. So, but yeah, there's a significant amount more of liquidity coming in right now. So but yeah, I mean, here's the thing we should mention. Like, let's say, like, right over here, you're then trying to buy contracts, and then like 15 minutes goes by, another 5 minutes goes by, and the chart's still going. This is where you now need to really be like, okay, what the fuck am I doing? Because I could have got filled 10 minutes ago, and other people are getting filled. So what are they doing that I'm not? That's where you need to be like, okay, maybe the information here is something's fucking wrong with the data, because if this shit's going up, then obviously people are getting filled. You gotta start to test some contracts, put one contract at the ask price, see if that gets filled, and then you go, okay, now I can just go put 10 more contracts on there, and then start to spread them over strikes and shit like that. Like, if those of you that are like, you want to buy like a specific contract, but you're not getting filled, and you've tried put the limit rate on the ask price or something, but even that's not, and you don't want to put a market order, then just start to spread that shit out over multiple contracts and testing it, right? And just put that on and start getting filled, because that time that you're missing here is 100% going to change the trade. If you got filled here, right, this would be like your normal fill here probably. You're waiting, and then it goes. That's 2% you've missed on the underlying, which is probably in the long run going to hurt you, because people are going to start to take profit here, and depending on when you bought, now your volatility, it's not so much the underlying move, it's the volatility that's going to hurt you. It's the volatility that changed, and that might be what's messing up you getting filled, is that the volatility increased by so much, and it's just not, people are not registering it in terms of doing it, but people are actually selling the contracts for more, but it's not showing it, right? Just not showing it. That's where you need to know the theoretical value Over here, that contract turns into a whole new contract in terms of IV. As soon as this move starts in here, that option chart is now, or the options are now calculating, oh, well, fuck, our IV's about to explode. And you're done. Because it's moving at such a quicker rate, right? Like this, you're done. You got to get filled now. I mean, it's getting too late. Or else you're chasing. You're going to get someone that's going to sell on you, right? It's like people trying to buy my CCL calls over here. They're willing to pay they're literally willing to sell their first child. And it's like, where were you a week ago? Let me see here. By the way, our open position is still up 8%. Open. It's in a pretty good spot, right? Pretty good spot there. That penny stock I called out, boys. You're still going. Oof. Stupid penny stocks, who cares? XTI. Big boy moves. Continuing. CBAT hasn't moved much further. Pola. Possible move incoming. Looks more like Monday. Sabre, of course, Maxer, Plug, RESN, SSYS. Crazy move in here. Bullish candle. Sets up a good Monday. MP continues, right? We've turned that candle now towards the upside. Apps, of course, we talked about. TCS, of course. That move is that trade, right? Whether you had a long trade or you took this trade from open when I talked about it, that is a trade and a half. That's for sure. That is a trade. TCOM continues. Some of these are Fiverr with that continued move as well. NMR, KLX, DK. Oh, that ENPH chart looks very good. RCL, of course, continuing the rest of the travel boys. C's, of course, we talked about. Pot stocks, DFEN is at that level. So the JMIA chart, of course. Save continues. That looks pretty good. Oh. Interesting. We'll see, guys. We'll see. Lunch. In terms of lunch, we're coming in. It's about 10:50. Coming into lunch. We're getting tightening in the market, so we're certainly going to see some ideas get expressed. You've got this tightening. Move needs to go to the upside or downside, right? Somebody's got to do something. Someone's got to do something. It's tightening, right? However you want to look at it. You've got tightening. Right? However you want to look at it. Doesn't matter. You want to look within here with like the real body average. The average of where all the candles are. Screw the wicks. Look through here. Look at that tightening. Someone's doing something. You've got to make a move one way or the other. You don't get to just do nothing all day. Spreads don't stay tight. Consolidate, breakout. So we should be getting some points here in the market. And again, the good example. Here's the market average, guys. Flat. Market average is flat. What are we doing? Well, you've seen the charts. Velocity central. One-way train. Rockets. Planes. Boats. Death boat wants to put a few more points on. Anyone has any death boat recommendations, let me know. Not really a cruise guy, but 2022. It's going to be here sooner than you know it. Go RCL? Yeah, that's what I figured. Get the big boy ship. I want the big boy boat. And let's be honest, I'm not going to fucking do that. I'm not going to be on a boat with like 6,000 other people. Take a plane to the island. Good. Sit on the beach. But Don, you don't understand. It's so much fun on the big boat. See, Don, on the boat, you get to do all these cool things, and your drinks are free. And you get all this cool stuff on the boat. And it's big. Okay. I get it. Free pudding? Exactly. Elevators get crowded. Get tired of those things after the first day? Exactly. I mean, they're cool. I think it's cool as fuck that we have these giant ass boats and a bunch of people on them, these cities, but I mean, unless I did it with a bunch of buddies for like a meme, I mean, I'll just get on the plane, fly down, get a hotel, resort, hang out on the island, get a condo for a month. But listen, Don. In terms of a cost basis, you just pay for it, and then you get to go to all the islands, free food if you don't want to pay for the extra. You get the buffet, Guy Fieri fries every day, pool with dirty piss water. Lot of chicks, Don. Lot of old ladies. Brian says I can eat dinner. My girlfriend won't leave me now. Nice. Hot Pockets are pretty cheap. How much are Hot Pockets? Like $10? $1.50? Sounds pretty good. Fiverr, again, this move here, understanding these pullbacks, what they lead to, right? What they lead to. We've certainly are putting some points on near the top. Again, CBAT continues coming through the high. I think there's some, I talked about, up here, you get the trend lines coming in. It's about 11.5. In terms of what you get on at the tail end of the day, it's going to depend on the demand that goes elsewhere. I would say that you can just come up to the trend line even today on this chart. I have no problem with it in terms of supply and demand, but it just depends on market demand. Is the demand going to go elsewhere in the market? And I think right now there is so much demand to go everywhere that you're not going to see the same momentum come towards the end of the day because it's going to be spread, right? So again, there's going to be some converging. It's not going to be leaders so much. So it is something to keep in mind if some of you want to realize some of your gains, right? Never go home. Don't go home empty-handed. Smooth looks like it's going to be the upside. I will mention the mega caps, right? Market's trading flat, so mega caps trading flat here. Not the best start to this idea because the demand's going everywhere else. All of our positions that are tied to value, to these big, trades, of course, are doing exactly what, and we've been trading these for months, right? For months and months. These different type of charts that offer this kind of trade here is for getting your cash utilized. In terms of my idea here, I would need to see a move today. I would need to say I'm up on the contracts, but I would need to see a move here for me not to put this. I could just put that on other trades. I can manage putting, I would need to get like 20 other positions to equal the cash amount, but I need to see the move. If the market's going to be flat and I can get velocity elsewhere, right? The trades through this market average, right? Trading this market average is great. trading this market average, and then all of our charts that are very much tied into this idea are great. You can get more, right? You can get more. You just have to get your cash working for you. You're gonna have to enter multiple positions because you're not gonna be able to get filled on everything, right? You have to put the bids out there on each of these contracts or each of these charts, and you're not gonna get filled on all of them, right? But that's why we go into bigger, you go into higher liquidity charts so you can get your cash in there, right? And that's the problem with some of you as well, that when you get up to a larger scaling, it's hard to go trade all of these smaller charts because the cash amount, you can't get filled on everything. Like you don't get filled on enough of a position to really compound your gains. You're chump changing it, which is a problem, right? It is a problem, and that's why we look for some of those. We look for some of those trades that allow us to get into a larger position. We don't need as large of a gain on it for the cash gain to be. It's not always about, you'll see for some of you that are now getting into the higher capital standing, you'll see you cared so much about your percent gain. Now it's about like your percent average. Now it's about the cash gain, because you could make 100% on a small trade, but you're only making like 1% on your whole portfolio for that 100% gain. Whereas if you made, let's say you made $1,000 in the day, when you could have just made like a trade that only makes you 10%, but maybe that's 10 grand on the day instead. You need the cash gain, not the percent. Sometimes you get fooled by that. Not a good look. Like, okay. I made $5 today. Okay. By making the upside, of course. Fun day, guys. Fun day. Volatility. We look at the macros. Volatility continues to come down. The dollar really just holding that same value, which is probably better than anything else. Remove the volatility from there as well. LX continues again as it broke that high. Not going to say too much about that. Over here on the Qs, again, Nasdaq trading flat. Now, close. Here's the mention, right? So same with that Apple position that I entered. Here's the reality, right? The big boys don't come out till close. We don't have really much money exchanging hands right now in the market. It's just the smaller trades putting points on. Not really a very large dollar amount or a large volume amount, right? You're going to get 80% of the volume today in the last 15 minutes, right? So remember where this chart is right now, that Apple chart. Those will not make moves until close. They would have made moves at open if the institutions were going to buy earlier, which means they're still waiting. If they're going to wait till close, they're still waiting to digest what's going on. Now, you're an institution, you obviously see that value is still continuing to do well. So you see, just like all of our travel charts, right? We capture that move. We understand where people are going to be going in later. Do they look at that and say, okay, we can't now put a large position there, or they already have one? And are they going to look at something? This is where the tech, it's a bet, right? That they're going to say, okay, the market's trending up. We're going to get all-time highs next week. We're too big. We need something liquid. How do we get filled today? They're going to have to go into the big boy mega caps, right? They're going to have to go there for liquidity. There's nothing else they can buy to get filled on. There's nothing else. They can't go fucking buy the save chart. Maybe a few shares. They're not going there. They're going to need to go buy something like Apple, Amazon, right? Short Facebook, buy SPY, buy the Qs, right? They have to go into these other avenues, buy future contracts, right? So come close, that's where we're going to be looking for. Where are the institutions going? Are we going to get paid on the tail end of the day, just like we're getting paid on the front? This week was a short week. We're on the short bus. Where is the short bus dropping us off? That's what I want to know. And who else is going to get on the short bus? Spy green. Tesla's still inside here, so we talked about this. It's holding inside the trend line, inside bar, helping it on the day. So again, this is the move you needed. You just need to hold within here for this not to be the case, right? So it's holding in the trend, but it's very close. And since it's now in the apex here, we talk about it. This closer and closer you get to the apex, the less of a move it's going to make one way or the other. So that makes also the upside potential not worth it either, right? The upside potential is not there either. So now you're going long or short is feeling less and less likely because you don't have a move yet. It's trading like the market, but it's just bearish against the market, right? Overall. Brian says, laser, lol. Okay. What do you think? Ladder 17 by next week? Oh, it's only 58%, guys. Oh, it would only be a 58% move. Only, right? Don't sleep on banks. Don't sleep on them. You've already slept on them for a week. OCX. That looks like fun. That looks like target soon. Trendline today. Sort of vibe. 777, 775, 777, 777. Marriott, Convergence, right? Everyone forgot about their hotel charts. Everyone forgot that if you take a plane to go somewhere, you need somewhere to stay. Obviously fundamental. I simply do not believe you. Re-OCX. Okay. See you. What do you think about Marriott? Do you think 140? What do you think that resistance is going to get reached today? 147.34. That would be what? Another 6%? You think this today? 7%. What do you think? Doubters? I think we've removed a lot of doubters from this chat. Everybody just goes with it. It truly is a fucking echo chamber now, right? We've returned to what we've despised. No new ideas. Only rehashing, gloating, making fun of others. Oh. Only the pics that go in the chat come from the charts. It's a very nice candle. Very nice candle. In terms of a new chart, I think you're really just you're honestly just pulling this and pushing it over here, right? You continue to consolidate for quite some time, go very bearish, and then you continued. It's the same trend line, right? Same trend line. Copy the trend line over, same trend line. Where it opened, at least the velocity, right? Velocity-wise. Looks like it. Looks like it. Pot stocks are going to be fun, huh? Pot. How do you like the OSTK here at a 100? I'm in a long position, so I love it. But in terms of new entries, I think you can certainly do it. You can certainly do it. If you're buying a long position, you can do it. Tightening enough. I mean, the timing sucks ass, obviously. Like, of course. But it's not like you can't do it. Are you going to get hurt taking this trade? No. Timing sucks. It's 11:08. You could have just done it at open if you're going to do it today. Long like 319. Is that a meme? I'm guessing that's a joke. More June? June is also probably a joke. I mean, you can buy anything on it. You could buy fucking Marches here. There's nothing wrong with it. Like, you can buy anything here. It just depends on what you want to do. That's where, like, again, it's up to you. Do you want to trade this and capture a move over the next week and then take the profit, or do you want to buy a longer term and hold through these moves? Right? Are you going to be able to buy this and then trade it towards the upside and then hold through this move? Well, then you're going to need at least April. You're going to need at least April contracts to hold through this. If you're in Marches, you don't hold through any of this shit, right? So if you buy Marches here next week, as price continues to the upside, as soon as it starts to pull back, you sell it. You have to take profit. You have to take profit. If you're in April's, then once it takes profit, you can continue. You can continue to trade it. If you're in longer term, keep trading it. If you're in out of the monies, well, you got to take profit there, right? Those kind of ideas. It's all up to how you want to trade it. And it's not, you don't get to know where it's going to go. You don't get to know what the price is exactly going to be. All you can do is when you take the trade, plan for it. So if you plan to hold through this, whether it continues to the upside or not, you're holding through it for the potential of future upside. So you're willing to take the risk of holding through that. Then you're going to need contracts that give you legs to do so. Because if you have Marches on this kind of move, Marches, you could gain 100% on your contract here by Wednesday next week. And then Thursday, Friday, it goes down 5% on the underlying, and you lose the whole fucking value of all the Marches that you bought here because now the whole trajectory is that's going down. So you would need April's, and April's you'd lose 1-to-1. So it's like, it's all about the plan. All about the plans. June too short leaps. Wiz, you're memeing way too hard, or you're playing a weird game. I know you're probably being serious, but I want to emphasize, right? Emphasize some things here. There's no difference on this chart to any other chart, right? There's no difference here to any other chart. So when you take this move here, you don't know that it's specifically going to be here, but you're planning to trade it that way. You're planning to trade it on a trend, right? Now, when you're in a trade, you have to transition trades, right? We talk about transitioning. So when you take this trade, for instance, over here, let's say you bought it from here to here, and then it started to pull back, right? This right here is 10 fucking percent. 7.5%, 8%. You're transitioning here. So you took profit. This is a 42% move, 41% move. You took profit here. Look to re-enter contracts. You probably had to wait and get the gap up, right? You probably took profit here and you were done. And then the next week you saw price go and you entered a new trade. Same with over here. You would hold through if you had longer term contracts. But again, these are both good. They're both good. And you do a mixture. You don't get to just say, oh, there's only one contract I'm going to buy. I can't possibly buy any others. No, you get a mixture of it because you're going to have a plan to trade, let's say, Marches up to here to transition, right? And as soon as it pulls back, you take profit. So you realize this hold gain. But then you also have April's, May's. Maybe on the next move, the April you have to take profit on, but you can continue to push the May. Maybe it opens and then it goes the fuck down here. And you have to exit it and stop it. It's just our rules-based trading. And it's up to you what you do with your portfolio, how much risk you want to put on. The shorter strikes you have to take profit on because they lose more value as the underlying goes down, right? So if you're in Marches here and price starts to pull back, it's going to lose more than the Aprils do. It's going to lose more than the Mays do. For every 1% you lose, it's a larger exponential. Just like for every 1% gain, the exponential on March contracts here would be significantly higher than those in May. The May contracts they have nothing on the March contracts. The March gives you an exponential because it's significantly more risky, right? There's a lot more volatility. When you look at that IV, the IVs obviously are all over the place, but what's being signified here is that you need to make more points in a shorter amount of time. And so if it does, you're making more on an exponential comparatively because the long-term contracts have a lot more time, right? If you have to make this move by March over here, and then you also have May contracts, well, look at how much more fucking time you have. Let's say, what is that? That was 125. So let's say 125 contracts. That's the March monthlies. The May contracts, you have all the way until out here to reach the 125. You've got all the way until out here to reach the March, the May, right? So you've got a lot more time so you don't gain as much as an exponential. Again, this is basic option stuff, and I'm not going to go over it anymore, but you guys know this stuff. And if you don't, you shouldn't be trading, right? You got to go read the book. Go Google what an option is. Here's your March contract. Here's your May contract. For every point you gain this way, you're gaining more here on an exponential. But for every point you lose, you're going to lose more here for the same reason. And also, as the time goes, the closer and closer you get to the expiration, the same reason why these longer terms don't gain as much or lose as much is the closer you get to that expiration, the more of an exponential there is there, right? And the more it will move, the more sensitive it is, right? Again, if this is now all of now some of you are going, well, is that why when I buy all my short-term contracts, I lose so much? You can be in Marches here. You can be in Marches here where, let me just delete these, and this will be my last point. Whatever. You could be in Marches here where you gain, let's say, 12% here. Let's say you gain 12% in 4 days. You're in a situation here, that 12%, let's say that could be like 60% on the option. Okay, so for 12%, you gain 60% on the options. That's pretty fucking good. It's probably way more than that. Let's call it 100 flat. Let's call it 100 flat. Let's say in 4 days, 10% is 100%, right? That's probably more accurate. 10% is 100%. But guess what would happen if you lost 2% here? 2% in 1 day would probably remove half of the value. You would lose half of the contract price. So here, you gain 10% in 4 days, you made 100% on the option. This 2% pullback in 1 day, you probably just lost 50% of your value. Because not only did you lose the underlying value that you would need to make back up to go to the upside, you lost the time and you lost the momentum. So supply and demand is now saying, well, there's more sellers than buyers, which means you're going to need to get more buyers. And you lost time, so it's going to take longer for that. Price consolidates. These type of things are now going to cause, it basically tells, the price is basically saying, well, one, you need to make up more time, and as you get closer, there's more sensitivity, and so you start to get a lot of negatives that build up quickly. That's why you need to move to continue, which is why, like, for instance, if you had February's here, let's say you bought February's here, do you get to hold through this into today? Absolutely not. You had to take profit. You had to take profit here, let's say this move, that's probably a good example you could go look at. This move from here to here was 45%. You probably made a fuck ton of money. An absolute ass load of money. You're probably rich. You're probably rich if you bought February's here. If you put 10 grand on this trade, you're probably what people would consider rich, right? Over here, this move, your contracts, if you had 110s, let's say you had 110 strikes, or even 100s, you had 100 strikes and prices at 98.5 right now. You know what your position's at? Fucking zero. Zero. Because you don't have intrinsic value. The contract needs to expire in the money to have any sort of value. And if it's not going to expire a certain percent above in the money, then this whole thing was bullshit. What this is projecting is that price is going to continue. So the pricing model is saying, oh, by this expiration day, it's going to be here. By the expiration day, it's going to be here. That's another 16% on the underlying. So that means you're getting a 16% discount, an extra discount on the underlying, right? Compared to where the $100 strike price is, right? And so what's happening is that this is no longer being put into the equation. This is what's happening. You're losing 10% on the underlying. You're not just losing 10%. It's not that you just lost 10%. You're losing the possibility of reaching up to here, which is what price was suggesting. On volatility, on timing, momentum, volatility, all of that is gone. But you were gaining on an exponential for the same reason. But even this just trending, this candle here would devastate the February monthlies as well, right? This candle would devastate the February monthly. So it's not, it would bounce back the next day, but it still would need to get exponential, because the exponential you're getting here, it's not linear. Underlying is linear. What's happening on the if you look at this straight line here, this is what the options contract looks like, right? But as soon as this is happening, it's actually causing you to lose this exponential. And for each time that you do this, you're actually fucking up your supply, right? And this is happening. See how I move this? This is for every time the underlying gains an extra point above its trend, right? Let's say instead of a straight line, it's gaining a little bit more, which we look at as a breakout. As soon as it starts to get back onto a trend, it's actually losing more overall in terms of an exponential, and this is where this curve starts to turn very quickly based on every percent move it moves the other way, because it's already on an exponential this way, right? And so as soon as this gets linear and flatter, that's starting to come down like this, right? This is the start, and as soon as this happens, turning over a little bit. As soon as this happens, this is happening very quickly, right? It's happening very quickly. It probably looks like this. This is what this chart looks like. This is what this chart looks. Let me do it. I'm gonna have to impose it, so it's gonna be like this. Let me impose it. So it's not gonna line up correctly. I'm gonna show you what it would be like. It would be like this. A bell distribution, but it's before. So it would look like this. So this would be this is what your profit would look like imposed against it as an exponential. That's what it would look like against this underlying move and what it entails for having these $100 contracts. That's what it would look like. You would, as soon as this happens, you're getting a significant amount of money. There'd be some like blips in here, obviously, but in terms of the distribution on a daily factor, that's what it would look like. And this is zero. This is zero. That's what it would look like. So as soon as this shit starts to happen, it's exponential both ways, but it actually is worse over here. This really, if it looked accurate, would look like this, right? And this is zero, because you don't start at zero. You're buying at like $5. This is $5. This is zero. This is what this would look like imposed against it for $100 Februaries. And so that's where when you're buying over here, you're understanding, It may not be the top of the chart, but it is for my option. It is for the option. And so that's where you're continuing to do this calculation nonstop when you're doing it, right? And you understand that, okay, the Marches are going to be on this schedule, but the Aprils are on a different schedule. The Aprils are on a schedule that, this might be the February schedule here. Well, the Marches over here are on, let's say, a little bit of a different schedule, right? They're on, where's the March date? March 19. March 19 is going to be, that's if it's not in the money. So Marches right now are a little bit further like this. But again, the tail end is always the same. The tail is always the same. Let's say it's probably more elevated, it would be higher. So here's your March potential, right? This would be your March potential. April potential, well, April's already cost a little bit more. And this would be your April chart. I don't know the exact date anyway. Okay. This would be your April chart. Right? So the exponential difference. So the difference here is that you're trying to gain an exponential. Maybe this is a little bit more like here. So the difference, again, you have a higher price point based on the contract length, right? Because the IV, and you have more time, so you're paying a premium for the more time. But the exponential here would be greater because it's a shorter term contract. It falls off sooner, right? And so this is the idea. This is what it looks like against it when you're like imposing against the underlying, and it is sort of like out here. I'm just trying to give a better example. That's what it would look like. And this is 0. Not sure if that helps. Interesting example, I think. And that's how you want to think in terms of your mentality. So then it's not so much that you need to know. No one gets to read a crystal ball, and I know I put targets and things, and it happens sometimes. But it's a plan because you're planning against this. So you buy Marches here. Well, you need to understand where you are here and that this can happen at any time. So if this, you got up to here, but then it started to turn, you need to understand that you're turning on here in a much more violent way, and that for this not to happen, it would need to change course, right? And so a new one of these would be created every single time there's a new move, right? But this would be moving dramatically. You'd be moving on this line dramatically back and forth, right? And so that's where these ideas come from, right? And so what's the best way to do this? Well, the best thing to realize is that, well, fuck, this is a bad time, but I do have an ability to trade this. I just need to be aware of my schedule in that, okay, depending on what happens, I'm going to need to trade it a certain different way, right? April, you can push further. In May, you have an even better move, right? May, you've got even more time, so you have more chances to capture, but you're not going to gain as much, so you might have something that you get a better exponential somewhere else, of course, right? There's good trades out there. There's people that are still sitting in there's people that are sitting in AT&T over here, right? That missed this whole move. But they're like, well, I'd rather put my money in AT&T than in this move, right? I'd rather put my money into BA than into that move. It's the same entry, but they'd rather sit in this position. Which one do you want? Well, you get to decide, but this is where you need to do opportunity cost. Both are opportunities. I would say the BA is a good example of there is an opportunity on this whole defense and aerospace thing. This is what we've been talking about. So there is a convergence chance, but guess what? This here, you're breaking even. And yet it was a good possible entry, for sure. It was there. But when you compare the two, I'm not just talking in hindsight. When you compare the two, which one actually offered a better reward compared to its risk, and also had the volatility to give you the reward in the first place? BA hasn't moved in fucking ever. It needs to break out for any chances there. This is a good example of when you look at those fucking curves, You know what the BA curve looks like? BA curve looks like, I don't know. It would be actually, you know what the BA curve looks like? It's more like the sense that it it has doubting right now. And so it's actually, this would be the case on the BA curve, and then you have the other curve on the other side where it goes to zero that I just showed you before, right? Where then it does this, right? This is the problem with the BA curve. Your reward is very low until something actually starts to happen, right? Whereas on the CCL move, it's very much like what we saw on the other, what I showed you on the other side, which is that for the same move, the difference here is that the exponential starts immediately. Maybe the same upward trajectory, but the exponential, the reward here for the risk, you're risking the same amount of money at the same time, but the reward is already on an exponential. The BA move is actually like this when you do the math on it, right? Because it hasn't been making a move. Now, it can quickly turn into that, right? This could be like, this again could just be one day. This could be in the presence of a day. But I'm just saying the difference here is that it needs to get going for the same risk. You want the exponential. You would take the exponential, and you would get paid almost more than likely, significantly more based on the CCL chart than the BA chart. So then you start to do, well, what's my maximum probably reward based on the move? You would obviously, it has more, right? Now, this in the tail end might have more, right? But it's on a different, it's way over here. It would be on a different contract. This would not be for Marches. This would be like the March contracts, right? But the dividends on AT&T, exactly. All right, before lunch, let's, again, for your lunch pullbacks, this kind of thing here, are you getting shaken here? Oof. If you entered here, ugh. I don't know, you entered over here, oof. Be mindful, right? You're up 15.5% on this chart. Don't forget when you get lunch pullbacks where you actually are. Price needs to consolidate. It does pull back during lunch. You're aware. Don't, go against what you see, right? That play chart. Retail stores. Again, this DraftKings move, and I talked about it at the beginning of the week that on Friday today we would be looking for those retail favorites again. And I mean, obviously, I mentioned it at pre-market. We're going to take that trade, but I did mention last week in terms of a more macro idea we were going to have was that for Friday we'd be looking to put on retail risk trades, right? This kind of trade for the weekend is such a good trade. The reward you're going to get for that point, due to everyone buying such shit contracts and everything else, is so nice. It's going to be so nice on these type of contracts. And it is nice to get confirmation again from the beginning of the week over here to say, is it broke down that, okay, by Friday, it becomes a good risk trade, whether it was down here still. Now, of course, we would have preferred if it opened down here, right, for the Monday trade, for over the weekend. Of course, we would have preferred that. Of course, right? It would have been an even better trade, right? But it doesn't take away from the fact, but it's confirming the idea still. It's just confirming it even earlier. And we take that trade every time, right? We have a lot of examples, right? I mean, it's, like I said, I think a couple days ago, it's very hard to convince yourself that you can't take this trade. Like, where's the price going to be next week? It's really hard to convince yourself that this was going to be down if you think about what the trend is. Yeah, you can say, well, you don't absolutely know that. It could be lower. Absolutely, it could. But probability-wise, you got a much higher probability it's going to continue its trend, my friend. Okay? A much higher probability. Like, well, just because something happened before doesn't mean it's going to happen again. Okay, this isn't fucking gambling on whether someone can hit 10 basketball shots in a row or not. And just because they hit the last one doesn't mean they'll hit the next one. No, it's not. That's not how it works. That's because your mindset is set to this is gambling. You don't get to keep winning, like they say. The winning from before doesn't mean you keep winning. Guess what? It's a fucking market. It's price. People that were willing to buy before don't all of a sudden, I mean, they do at levels, and that's why we track support and resistance. There is a point where they're willing to buy and a point where they're willing to sell. You know what a trend means? They're fucking willing to buy. You know when they sell? Well, they sell when we reach a resistance, right? And we talk about resistance levels, trends, how that causes that psychological buying and selling idea. But again, this idea that this trend would not continue is not the running hot idea that people think about in terms of gambling. The running hot that, oh, it's just going to continue being good. And that's not what it means. It means in terms of probability, it's likely that if you are willing to buy at 90, that you're going to be willing to buy at 85, right? If you're a buyer at 90, you're going to be a buyer at 80, 85, everything below, right? And that's the idea with a trend, that as price moves away from a trend, if you are willing to buy up here, you're willing to buy over here. If you're willing to buy up here, you're willing to buy down here. And then you do the calculation, well, how many buyers are there that are willing to buy here? And how many people are willing to sell and want to sell at a certain level? That equation is how we're getting price and how we get the movement and understand, okay, there's more buyers than sellers right now, which is why the price is on a certain velocity. Guess what? This chart is mapped out. This is the same velocity since last year, for months now, since November. And that's after the event that we talked about with the presidential election that really shifted our entire supply curve everywhere. Since then, we've been on the same velocity being the speed at which you cover a distance. This is the ratio of buyers to sellers. That's it. Just a buy-seller ratio. And it's the same, and it's continuing. For something to change, something would need to change in the chart itself. Something would need to actually change, which is when we have events. There's certain events that occur that cause certain price movements, and that's where we look to the market for answers, right? There's usually some sort of market answer that will tell us there's going to be a shift in the curve. What was it over here? The presidential election. Does the presidential election have anything to do with this fucking chart? Probably not. On a fundamental level, the president has nothing to do with whether this company succeeds or not. But it does in terms of the way people trade. You know what was happening over here? People were hedging up their butthole. Out of their ass. They were hedging the presidential election, so they weren't buying this chart. They were doing something else. That's called demand going elsewhere. So the equation changed. It's the same equation as over here. This line I copied over here. It was on one trajectory. Hedging started for the presidential election, not on this chart in the market. Demand got lost here, and then it continued. There you go. So when you come into support on a trend line, you don't get to ask yourself, well, or you don't get to tell yourself, well, you know what? Nothing has changed, but I'm not going to buy here. Like, that's what you're telling yourself if you ignore trades. I'm not going to buy here because there is a chance. Again, before we go on break, there's a chance that every time you step out your door, you get hit by a fucking car. You get struck by lightning. Are you really not going to live your life? There's a chance I hit black at the MGM, baby. Exactly. And I'll see you guys all at the Wynn this weekend. You winners. Who wants to go? Who wants to go to the Wynn? I looked at flights last night. There's a couple. Get one at 5. There's like some at 4, 3. Win money better used for trading. I don't care about the money. The money is not the point that matters. It's the being right part that I care about. And the fun of it. Oh, true for you, Ecto? Probably. Those of you that don't have disposable incomes, and that doesn't just mean like disposable income, that means like, yeah, you should really use that money for trading. Yeah, absolutely. Unless you have cash that you can't get into the damn market. and it's impossible, then you shouldn't be spending it. Think about it. What were you guys talking about earlier? Hot Pockets? For every single one of those Hot Pockets in your life, you could have bought something. You could have bought a call. All that dumb shit you guys buy, consumerism, you could have put that money into the market. It's like those guys that bought pizzas with bitcoins 10 years ago. It's like that laptop I had all those coins mined on when I was like, oh, this is so cool. And I was mining bitcoins on my laptop. Don't know where that laptop is. Craigslist. Craigslist knows. Somebody's got a hard drive with some bitcoins on it. I'm not sure how many's on there, but it used to be pretty quick to do those equations. Like 2009, 2010. It used to be pretty damn quick. I think it was 2010. Yeah. It used to be pretty damn quick. You were getting at least a couple bitcoins, over different periods. How many? I'm not sure. 3 digits. 3 digits. Why buy Nattenberg when you can buy out-of-the-money Facebook calls? I mean, Facebook's pretty cheap, right? It's pretty cheap. Someone's going to at some point say, all right, enough is enough. But guess what? You don't know when that is, and they don't know either. They'd let this go to 0 before they don't care either. So, bear flag. Are we going to say, well, there's support? Maybe that's a good opportunity. Okay. Everything's a fucking opportunity at some point, but you never... What about this one? Should we have bought over here? Should we have bought this candle here? You do that 99 times, you'll lose money. In that one time out of 100, you'll make money by buying on this. One time out of 100. Probably way less than that. That would be for shares. One time out of 100 buying this here, you're winning. Just making a profit. You don't know when to sell, but let's just say for the next day, 1 out of 100 times. For options, maybe 1 out of 10,000 times. That contract that was bought there expires in the money. Terrible fucking percents. If you bought February monthlies here, let's say like at the monies, the percent probability on that contract Black-Scholes probably popped out like a 2% for even at the monies. Are you getting paid on those? No, they're expiring worthless. So you had to have known when to get out. When do you get out and you don't fucking know. So that's the problem. Anyways, been doing a lot of memeing today. We are getting what I was talking about over here on the Russell IWM. It's coming up to the trend line, which is exactly what you wanted to see going before lunch, because now you can actually have a pullback into the trend line. So, I mean, it has nothing to do with me saying that, oh, this is for sure going to happen. I just talked about it from open that would be a good case for the upside, right? So just for anyone that's like, oh, well, you did say that, and look, it's there. No, it has nothing to do with that. It's a plan, right? And saying that it would be good for the upside, so we realize that, okay, based on that, calculate a few other things, if that's going to happen or not. So now a lunch pullback isn't going to hurt you based on some of these things, right? I mean, it is nice for the bull case, of course. I mean, look at that. Has not stopped. So, again, I think this is going to be a good learning week again, and I'm going to make sure we talk about this quite a bit. Maybe we do something about it, because it's a very good learning week again, that if you're getting hurt through this type of thing, you got to figure out what exactly is going on that you're getting hurt from, and maybe this isn't even enough. Like, the problem is that this is not a good example because it's the average, and a lot of our charts for trading don't look like this. But for instance, if you are buying down here, but then you held all the way down to here, then you're doing something wrong. You're doing something fundamentally wrong, like in your trading, not fundamental analysis. You're doing something fundamentally wrong if now you're just all of a sudden break even, right? You had to have gotten stopped out. If your options were here, then you must have gotten stopped out. That's what we talked about. We had a lot of extra cash because we broke even on a lot of those trades. So then yesterday we were like, well, fuck, man, this isn't going down because we're not getting any macros, and so there's a lot of opportunity to put positions on, and now look where it is. So what happened here? Well, let's say you transitioned here and made some money. Even if you didn't and you broke even here, you lost 1 day, okay? You lost 1 day of that cash, but for the opportunity of the upside, you had to take it, right? And more than likely, you got a profit there. If you didn't, though, 100% makes sense, 50-50. But if you bought over here, now look at the difference. Now you've gained here. You made the same trade for the same opportunity. You broke even, at most lost 10% or something because you fucked it up. It's okay. But now look at the gain you're making here. Now you just made significant gains. Considerable gains, right? Because of the way you took that trade. So, and going over to the weekend, this is just the start of it, right? You're not trading it for where it is now. You're trading for where it's going to be next week, right? And so, again, you can't, just because maybe you get fucked up here, some of you lost money here this week. You're not going to have a green day every single day, right? You're going to lose on some days because you're trying to, you don't know what the variance is. There's always going to be variance. You have to take that trade every single time based on our rules. Sometimes you're going to lose, and sometimes, and you know, if you're playing it correctly and you've got the learning curve figured out, then you're going to be gaining a significant amount when you do hit it, right? This should be a break even. A lot of you have gotten to the point where you can break even on every trade. You got to get to the break even point, that turning the corner to profitability, right? Those of you that are still getting hurt on, it's because you're not putting stops and you know you're just being lazy. You guys know the difference. And then when you take the trade, you're making a significant amount, right? That 100% mentality, right? You make a trade, getting 100% out of it. Now, your average over a year doesn't need to be 100%. It's not going to fucking be 100%, right? Some of you with small accounts can easily do it, right? You can turn 25K into 100K in a year. It's a lot harder to turn 100K into the same ratio, right? It's not, you can't 5x, you can't like 5x 100 grand the same way you can 25,000, right? Same way with $1 million, right? Now, there's times you're going to, but that's variance. You don't get to decide when the market's going to give you opportunities or not. You just take them when you can, right? You take them when you can. All right. Anyone have any theories for lunch before we take a break here? Speak your mind. You will be heard. What am I doing here? Let me see. Let me see. So again, we have a very good. We're in a very good spot for a lunch pullback based on the gains here. So I mean, we've already seen quite a few charts start their pullback because they're up a significant amount. So of course, if there's a significant amount, they're going to be losing some points. Oh, I've got all kinds of weird things flashing over here. I don't know if you guys see that. Oops. All right. All right. Remember, you get rich quickly. Might take your whole fucking life to get to the point where you can get rich quick. But that's how it works. Some of you grinding every day, you're working up your learning curve, right? Your whole life's on a learning curve, right? Especially trading. It's on a learning curve. The compound idea with trading, right, is that you're on this for a long time. It's even worse than this. This is not even the best example of what the actual exponential is of compounding, but we'll just call it the normal, right? This is you guys, some of you are over here. But once you get into here, let me make it bigger. Once you get into here, it gets very steep very quick. in terms of how quickly you make money. Maybe this is 25,000, 25, 30, 30, 35, 40, 45. 50, 100, 250, 500, a million, 2 million, 5 million, 10 million. It happens very quickly, right? But this might be 10 years, 20 years. Maybe it's a year, 5 years, whatever it is that you're on for a learning curve. This is the money that you're making. And then all of a sudden, it's going to happen. It will just happen overnight. I promise. I promise it just happens overnight. That's how you can ask anyone that's made a significant amount of money doing anything, right? You created a company. You entrepreneurs out there. You create a company, you don't really have the money until it's fucking valued at something, right? The revenues you're making are decent, and then you get fucking paid. You get paid one day, and someone buys your company, or your company now all of a sudden is actually worth something, and you get paid for it, right? Look at it. I'm not going to use like billionaires as an example. That's ridiculous, but even billionaires became billionaires overnight. That's literally what happened. Same with trading. You're going to make a trade, and then it's going to fucking hit. And you're going to now be in an account you go from a $25,000 account to, a $250,000 account real quick. And then that $250,000 account goes to $1 million, and you get onto the exponential, and it's going to happen. Now, it may then flatten off, and you may not do anything for a while based on it, but it doesn't change the fact that once that money's coming in based on that time, right? That's what this whole thing was, right? And those of you that were here kind of experienced that with even myself a little bit, that moment of over here when I hit that, right? I was not a millionaire over here. Those of you that know me, I was not a millionaire over here. You know what happened over here? Since my first trade, you know how long it took me to make my first million? It took me 10 years from my first trade to make my first $1 million. Like a real trade. It took me 10 years to make my first $1 million. My first $1 million was over here. We don't have the logs anymore. My first $1 million was right over here. $1 million. Took me 10 years to make $1 million. Took me a long fucking time. I was doing well, but those of you that know me, I spend all my money. And so I'm talking about like $1 million account. I spend my money, and I would have to make all the money back. I have bad lifestyle habits. But so over here, I made my first $1 million. 10 years, right? Some of you are going to make it in 2 years, 5 years. Maybe some of you older guys, it's going to take you 30, 40 years, right? Until you finally figure it out. I'm not talking about fucking retirement money. If you're 80 years old and you don't have $1 million, then you fucked up somewhere for sure. I'm talking about trading. So I'm not talking investing, I'm talking trading. 10 years to make my first $1 million. Do you know how long it took me to make my next $1 million? 1 month. Took me 10 years to make my first $1 million, and it took me only 1 month to make the second. That's how you make money. And it's going to happen to you guys. Most of you have already started that. Most of you went from working some dumbass job, you quit your job, and now you're sitting on the beach drinking margaritas, wondering what the fuck you're doing. What am I going to do now? And now you're asking weird questions because you're like, well, what do I do with this now? How do I trade this now? And that's where maybe now the curve stops a little for you because you're trying to figure it out. Something new. It's a whole new learning curve. And I've gone through that a little bit myself, and I've talked about how I had to change that style. Over here, we were going wild, right? We were going wild over here. Getting up to 100 positions. You're never going to see me at 100 positions again. I'll never be at 100 positions again. Never. So you do have to change. But again, that curve, it's going to happen quickly. And you gotta grind through it. So this week is a part of that story, part of that grind of understanding. And you're going to get to the point where then you can avoid those losses like over here. And I'll keep mentioning it as well. That selling on a Monday, right, before the market pulls back and then everyone else gets hurt. It's not some sort of conspiracy thing. No, it's just a part of your learning curve, right? Being able to sell before the market pulls back. That it's not even a conscious decision half the times. You just know, right? You just know. and it's avoiding the losses that allows you to, that curve goes one way. If you interfere with that curve and it starts to go down, you lost money here, well, then your curve's going to get real fucked up. It's going to be a bumpy road. That's like you're going to be a fork in the road, right? You're going to be Alice in the Wonderland over there. Think about it for this week. We'll talk about it more coming on into close. Break down what happened this week, things you could do, what would have been some of the perfect scenarios, perfect trades, where we fucked up, where I fucked up, what we did well, right? We'll talk about it at close. For lunch, drink some water, enjoy. Don't freak out about some pullbacks. 100% is going to happen. Unless some of you want miracles to happen. Maybe it goes all-time high by close, right? That would be pretty impressive for some of your positions. Either way, enjoy close. I'll be here. I got some other things to do. So I'll see you at close. Those of you on the other side of the world, enjoy your weekend. I will see you on Monday for some more fun. Enjoy, guys. Talk to you in a few hours.